Hello everyone, and it's a strange day in Australia. It's storm clouds one moment, sunny the next. Depends on your location. Of course, some of us are more fortunate where we are for this lockdown, and lockdowns themselves seem to be contagious at the moment, spreading around the country as they are. So South Australia's lockdowns, Queensland has some restrictions, but New South Wales, Victoria is fully locked down, parts of all of Sydney and now parts of regional New South Wales as well. There's a lot more going on in the world, but it's really an example of what we could see yet again in the world. A lot of people are talking about how, Australia and New Zealand were the only countries having lockdowns. Well, they could be coming back to other parts of the world. In the UK, the big experiment is underway, but they're having record new case numbers now and hospitalizations are going up again. So we'll see how that grand experiment unfolds. In terms of economic data today, a bit worrying for Australia really. What we saw was retail sales down a whopping 1.8%. Now, retail sales were down 1.8% in Australia. The market was expecting 0.4 down, but a lot more serious than that. And on the same day, we've seen that the Westpac Melbourne Institute leading index for the economy fell yet again. So that's 2 months of contraction from that indicator. So the Australian economy is not bulletproof. It's not doing fabulous. It's doing fabulously well in the aggregate data, but I think there are problems underneath the surface. The share market, obviously the US markets had a big correction period, then a good bounce, but that big bounce that everyone got so excited about was really only recovering about 50% of the previous losses. I still think this could be a bounce to sell. It may have just that little bit more in it, but it's probably a bounce to sell. I tend to be very much on the cautionary side of things at the moment for stock markets in general. And when you come to the Australian stock market, what we saw early today was basically this idea again that the smart people are just buying stocks whenever there's a lockdown or case numbers go up because it won't last forever, and even if it does, the government will have stimulus. Well, I think there's a couple of flaws with that argument. As we know, small business employs about 70% of the Australian workforce, and a lot of small businesses are really hurting this time around, and a lot of small businesses are just thinking they've been trading for many years. This is just on again, off again sort of process is just too much hard work, and they can't be sure of their revenue streams going forward, and maybe it's time to just close up shop. Now, that's not going to happen on a massive scale, but it is going to happen. So there will be employment impacts from that further down the track, as well as the immediate impact of what's going on in terms of the lockdown situation. So all is not well for the Australian economy going forward, and we still haven't mentioned what I've been going on about for months now, this stimulus bringing forward, sucking out of the future, if you like, economic activity that would have existed in the future has been sucked out of the future into the present because there are all sorts of tax benefits and other stimulus measures going on. As I'm speaking to you, the tide is coming in, so I better wrap up soon before I get washed away. I'm sure you'd all enjoy that. But the tide is also, I'm trying to think of an analogy now to link it all together. The tide is all, the waters are rising, if you like, on the ship or on the tinny out there on the bay regarding the Australian economy being strong. So I think the tide's coming in, things get a bit swamped, and we could tip over the edge. Oh, I got there. I do hope you're all having a good day wherever you are, and I know most of the world isn't in lockdown, but a lot of areas of the world are still suffering tremendously from the impact of COVID in real time today. The human tragedy continues to unfold, and in Australia, a lot of us are in lockdown. So I hope you make the most. Try to turn it into a positive opportunity to do something new that you haven't done before, as well as working from home. Do your work better than you've ever done it before. And why not one day over the next week just say, you know what, regardless of lockdown, this is going to be one of the best days of my life. Coming back to markets, I do think the US stock market's had a good bounce, but it won't last. If you saw my written piece today, I've said, hang on, I had an orangutan, sort of holding on to a vine, because we are going to continue to see volatile ups and downs, but this sort of price behavior could easily be part of a major topping out process, and I still stick to that scenario. Oil continues to be weak as expected. Australian dollar continues to be weak as expected. Gold had a bit of volatility, but I still do like it. And overall, I think European stock markets could have a bit of a bounce after London Open on the basis of what happened in the US. But even with what happened in the US, the last sort of 4 to 5 hours of the day, the market really only went sideways. It didn't continue higher. So it was sort of stalling out already. And we've seen a little bit of that price action in Asia today. I guess in economic data today in Asia, we did see Japan exports and Japan imports both rising, which is good. They were good numbers. And it's all part of the turnaround process that is still happening for Japan. There's no doubt the inflation wave is coming. If you saw Germany's producer prices yesterday, a 39-year high, and a very strong uptrend in that data series. So I think we are looking at a continuing acceleration rather than transitory inflation going forward. Not a great mix of economic forces at play at the moment in terms of stock market, given that stocks are already so fully valued. I'm Clifford Bennett, Chief Economist, ACY Securities, where we say it first. Have a very good day and thank you very much.